Hello, good morning and welcome. You've tuned into ET Now and this is Buy Now, Sell Now with me, Varun Hiremat, and along with me, Mubina Kapasi, who will be with us in just a minute. Let's take a look at the markets this morning. We're having a very positive day in trade. The Nifty is 80 points higher. There's very little that's losing today, right? Before I get to the benchmarks and how they're doing, let me tell you what's losing, because there's literally 7 stocks. Hindustan Unilever, Eicher Motor, HDFC, Britannia and HCL Tech. These are 5 of the 50 Nifty stocks that are declining right now. If you pay attention to how the indexes are performing today, it's a clear-cut move on the Realty index. My producer can bring up some Realty stocks, TLF, Sobha, 2.84% change on the Realty index. So that's the largest gainer today, followed by metals. Metals are also having a very good day. They're currently 1.7% higher. A PSU banking index today is also making a comeback, 1.35% higher for that one. But I mean, I can't find an index today that's not gaining. The regular Nifty bank index is up 1%. The auto index is up 1%. The mid cap and small cap index are doing well. The media index is doing well. So we have a day of very positive market breadth. Obviously, last night, that stimulus deal, the president finally signed it. This morning, we saw the futures suddenly shoot up 100 points on the Dow. And then, of course, the SGX was also indicating that we're going to trade firmly above 13,850 today. And that seems to be playing out. In terms of the largest gainers on the Nifty, Tata Motors today, post the Brexit deal being completed, a 4% gain seen there, $182. Brokerages have a 220 target there, so still considerable upside left on the table. Then we have a JSW Steel that's up 2.5%, and SBI Life that's gaining very smartly 2.4%. HDFC Life, the leader in the sector, also up 2.2%. So very rare that we see 2 insurance heavyweights in the Nifty gainers today. Both of them are there, SBI Life and HDFC. Finally, and Adani Ports also doing very well today. So let's see how we close in trade. Currently, futures in the US are still supporting, and it seems that we're going to wind up this year in trade on a positive note, contrary to what a lot of people were saying at the start of this December series. But that's how the markets were faring. Now we are going to highlight 10 stocks for you that are active today for various reasons. The BNSN stock cloud should be coming up on your screen in just a minute. So let's begin. We have Tata Motors there. Brexit overhang is now gone. Cost-cutting initiatives should lead to deleveraging and, of course, price appreciation. We then have a lot of pharma stocks in there today because that index is making a comeback, and obviously the environment remains very favorable for Indian pharma. So you have Aurobindo Pharma, Lupin, Biocon, all 3 in there hogging the limelight. We then have Coal India, PSU, that's also featuring today. Axis Bank as well, as a lot of brokerages are very upbeat on that stock. And SBI Life, we just told you, is gaining very smartly. And again, a lot of brokerage houses very positive on that. We then have a Paisalo Digital, which is recently seen buying from some very interesting counters. And then an NIIT and a DLF as well that are doing fairly well in trade. And that's the BNSN stock cloud for you this morning.
All right, well, that's, of course, all the stocks that we'll be watching out for in today's trading session. But let's kickstart Buy Now, Sell Now and get to answering your questions and queries, get you top trading ideas as well for today. We have with us Kunal Bothra on the technicals and Raghvendra Kedia, Managing Director of MH Capital, on the fundamentals. Gentlemen, good morning. Thanks so much for joining in. Kunal, let's start off with you first. Your view on the equity markets and share with us your top high-risk and low-risk ideas.
Good morning, Mubina. I think the last week for the year 2020, I think has started on a very strong note. It's indicative that the market strength is extremely strong. The bulls are making a roaring comeback. They want or they would rather expect the indices to close as high as possible. Data on the FNS side, especially on the last weeks of V-shaped recovery after Monday's big sell-off or the previous Monday's big sell-off. It's almost like a V-shaped recovery on the indices. And the data on the options now indicates that there's been a huge build-up of call options on the 14,000 strike for the current month series, and that whenever that has happened towards a particular strike which is just slightly out of the money, we've seen that the Nifty or the indices they generally tend to head towards those kind of benchmarks. So I wouldn't be surprised that the Nifty, in fact, tries to reclaim that 14,000 mark or even cross that as well over the next couple of days before we go towards the onset of the December series expiry. Now, on the backdrop of this, expecting that the markets would continue to remain buoyant, expecting the overall trend to remain positive, I would expect that the auto stocks would make a very strong comeback. Now, we've been discussing about IT stocks, pharma, the FMCG, etc. But somehow the auto stocks have just about gone through a bit sideways. But there are some positive signs which are emerging on a couple of names. So I'm highlighting two stocks over here. The first one, which I'm suggesting, is Zaban Bajaj Auto. I think the stock is heading towards a very strong breakout on the weekly and the monthly charts. The 3,300, 3,050 hurdle, which was a major resistance for Bajaj Auto, that seems to have crossed quite comfortably. So I would expect the stock to rise up another 5 to 7% higher in the very near term. I would suggest the ban Bajaj Auto for targets of 3,550 and stoppers to be kept at 3,350. The second is again from the auto pack. It's a ban Maruti. The stock is trying to come back into the thick of positive uptrend. We saw a touch and go movement towards 8,000 mark for Maruti. I think 2 weeks back. Last week was a week where you saw the stock going through a corrective phase. So I'm sensing that the mean reversion part is over for the stock and should be getting back towards breaking out of that 8,000 mark pretty soon as well. So a buy on Maruti with a target potential of approximately 8,000 and stoppers could be kept at 7,350.
Thanks, Kunal, for that. Well, Raghvendra, over to you then. Your view on the markets as we stand, as we're entering 2021, and share with us your high risk and low risk ideas from a fundamental perspective.
Good morning, Mobina. My view on the market as we start 2021 is broadly bullish. There is a lot of hope on the vaccine rollout, and on the back of this year ending, we have few positive triggers in terms of the US election, positive update in regard to India, a good monsoon on the local side, as well as the outcome of Bihar elections. So these the triggers from different spaces have been very bullish, which gives a head start for 2021 with a vaccine rollout hope in the immediate term. So we are bullish with a slow and steady approach on the equity markets for the year ahead. Moving on to a stock recommendation in terms of high risk and high reward idea, we have Gujarat Narmada Valley Fertilizers, that is GNFC, at current levels of 230. We believe this 3,500 crore market cap company, which is currently owned by the Gujarat state government, will do very well in the days ahead. TDI is the core product of GNFC, and in the last 2 months, TDI prices have gone up by 50%. This was led by the demand uptick in TDI, import duty increase on TDI. So these triggers have put up the TDI prices up by 50% in the November, December, which could augur very well in the earnings of GNFC in the next 2 to 3 quarters. We have a price multiple of 12 for a full year EPS of 36, which gives us a target of 430 on GNFC. So that is 90% upside on GNFC from current levels of 230 going up to 430 in the next 12 months. So that is the high risk, high reward idea on GNFC. Moving to the low risk, low reward idea, we have Larsen & Toubro. This large cap company has a revenue of 1,50,000 crore plus, market cap of 1,80,000 crore plus. So in volatile times, this stock would do very well, which has also been seen in terms of COVID or demonetization or GST implementation. With this company having verticals across engineering, capital goods, construction, now into real estate, financial services, information technology. So Larsen & Toubro would be a direct play on India's growth story, and it could be a core portfolio stock for a long-term horizon. We have an upside target of 30% from current levels to a target of 1640 for a 1-year horizon. L&T Defense is also doing very well, supplied guns to Indian Army. They are doing shipbuilding for the Indian Navy, supplied drones to the Indian Air Force. So that is a high margin business for Larsen & Toubro. With Mr. Nitin Gadkari as the road construction minister, this stock on the construction EPC side would also do very well in the quarters ahead. So we have a buy recommendation on Larsen & Toubro as a low risk, low reward idea with a 30% upside and a target of 1640 in the next 12 months.
Okay, thanks for that, Raghvendra. You know, we've also been catching up with a lot of experts and asking them for their top bets for next year. If you had to pick 4 or 5 stocks that you think are going to do really well in FY22, what would those be?
To begin with, few stocks we have shortlisted as top picks for 2021. We have CDSL at current levels of 525. That is a top pick. JSW Energy at price levels of 68. PTC Financial at price levels of 19.60, and a Cochin Shipyard at price levels of 365. So these 4 stocks from different sectors continue to be our top pick. If market remains neutral, we expect a 30% upside in these stocks. If market remains positive in the next year, in the next 12 months, these stocks could also give a 50% plus returns. So these are our top 4 picks for the calendar year ahead.
Have it, ladies and gentlemen. I hope you've taken note of some of those ideas for 2021. Okay, before we, get to addressing your questions and queries, here's an ET Now exclusive. India's largest car maker, Maruti Suzuki, is setting a stiff target for itself for next year. In an address to all the vendors, Maruti has told them to be prepared for a 2 million production mark in the new year. We have Utkarsh Chaturvedi joining in with more details. Utkarsh, clearly Maruti seems to be extremely bullish, on domestic sales, on exports. And, 2 million is definitely an interesting number. The question is, Utkarsh, why are they so bullish?
Said 2 million is a very important mark, is a very important number, a very big number for Maruti. In 2015 conference, they had said that by 2020, they will be hitting the 2 million mark. Now, that didn't happen given the pandemic and the demand really going down. But it seems that Maruti seems to have gotten its mojo back. They see good demand in the Indian market, as well as now they're looking to use the Gujarat plant for exports as well. So this is a two-pronged strategy by Maruti. It has addressed to the vendors, and they've said that they will be setting the 2 million target for 2021. Even it was not able to do, they were not able to do it in FY20. Now the idea is one that 200k capacity will be additionally given to them in Gujarat in the Q2 of the financial year. So say the second half of the year they will be getting additional capacity where they will be really taking the Desire platform and will be manufacturing from there. They've in fact told their vendors that the supply should not stop given the fact there is demand. So if you are facing any issues with components, tell us, we will airlift them to you. In the case there is a problem with containers, remember at this point of time there is some problem with the containers in the Indian market when it comes to importing of these critical parts, and that is why Maruti has also gone ahead to the vendors and said that if you want the products, we will airlift them from you. Keep transparency in all the processes, and let us know if there is any problem. But be prepared for this number. This is an important mark. This is an important target, given the fact that nobody thought that after what we went through in FY19 as well, the market going down, and FY20 with the pandemic, Maruti will be setting this target for 2021. This is almost a 30% plus production, at least from what they saw in 2020. So clearly, they're very bullish on the Indian market, on the Indian demand. They've told their vendors that any COVID impact is over. People are back to buying vehicles, and the Gujarat plant will also be used for exports in the ASEAN markets.
All right. Well, great, Utkarsh. Thanks so much then for giving us those details on ET Now. And on that note, we'll take a very short break. But when we return, we'll be answering your stock-related questions and queries. Don't go anywhere.
Hi, welcome back to Buy Now, Sell Now. Let's now get to the core of our show, which is about answering viewer queries. And we've had a lot of people writing to us about this stock. In fact, it comes up a lot. But this particular one is from Ajay Rana of Kolkata. And he's facing the same problem that a lot of investors are. He's invested in UPL around 1.5 years ago. He's now lost 25% of his investment in the stock. So if my producer can pull up the chart for a year, you'd see that it's been quite a downward spiral for UPL. Of course, we all know there's been various corporate governance allegations, and then there's that huge pile of debt. So Kunal, coming to you first, I'm sure fundamentally there's a lot to discuss here as well. But technically on that chart, does it look like UPL can offer any investor great upside from here?
The stock has not, had a history of, being in the, I would say, the negative or, the negative limelight for quite a long time. I think from 2013 or 14, when the rally, or when the best of the rally actually started out for UPL, I think it was one of the sought after, quality names. From 50, 55 or 60 odd rupees, the stock had gone through a 10x kind of a move. It jumped up to almost 600, 700 kind of levels. Now, on the back of it, yes, there are a lot of corporate governance news flow which is going around for UPL, which is why, if you look at it comparatively from March lows or relative to what the stock has done historically over the last so many years, it has significantly underperformed. The stock is still struggling around the 200-day moving average, even on the daily time frame chart. So I think the stock charts are already reflecting what the issue which is going around for the stock price. I believe that probably it might take some bit of more time for the stock to try and come back and restart its long loss uptrend. So I think in that regards, you can continue to hold on to your investments on UPL, assuming that if there are no serious damages towards the corporate governance for the stock prices, because as of now it looks like the stock would continue to remain in this whipsaw, in this volatile kind of a band. I would sense the volatility would get over and the uptrend would start once the stock crosses above the 550 level. This is the most important level for UPL. I think only the stock breaks above that 550 mark, you can probably expect a big reversal on the upside, and possibility of the stock coming back to 700 could not be ruled out post that.
All right. Well, that's of course about UPL. And yes, this is a counter that was marred with a lot of volatility owing to the corporate governance issues. Raghavendra, do you think that that could continue to be an overhang? And for that reason, perhaps you'd be a little circumspect on the stock?
Well, for UPL at 450 levels, it is a very attractive level. For the gentleman who is already holding, my advice would be to continue to hold. The company has presence across North America, Brazil, and these recent allegations or negative news flow regarding corporate governance from a whistleblower director, that price correction has already been in the price. So if one continues to hold from 450, we believe that considering it's a high beta stock, even 650 and 700 is a level which can be achieved in the next 1 year. So that level kept in mind, one can exit at 650 or 700 levels, but at 450, UPL is a hold currently.
All right. Okay, let's take on board our next question. Devika Kohli from Delhi writes into us saying, what is M&M's outlook in the near to medium term? Please suggest if I should buy at the current market price. Well, Kunal, the last few months especially, we've seen a nice rapid rally come by in the stock, especially after all of those bits with respect to asset allocation. The stock has, of course, trebled, more than trebled, I think, from the March lows. What is your view on the near to medium term outlook?
I think rightly said, Movin. I think it was a rapid rally for M&M, and the stock has found its mojo back. I think this was one of the highlights for 2020 as well. That many of the stocks which had long forgotten their I would say momentum or the kind of mojo, these stocks managed to make a very strong comeback. M&M was no exception. Now going forward, now that the stock is consolidating at the 700 mark, I would be extremely bullish on the stock price. I think I've been extremely bullish on the auto pack overall. I think M&M stands to be one of my top picks as well going for 2021. So I would believe that the stock should come back to the level of 1,000 at least over the next 6 months to 9 months. So if you have a time horizon of 6 months, 9 months plus, then you should be looking to buy M&M at current levels. And if there is any short term or medium term dip with the stock offers over the due course of time.
Okay, great. So buy on dip strategy from Kunal. Raghavendra, what about you? How are you viewing an M&M?
Has a presence across commercial vehicles, though it is not a market leader across passenger vehicles. Again, not a market leader in that, but it has a wider spectrum of product offerings from CV space to PV space, and they have a presence in electric vehicles as well as the defense outplay. So that augurs very well for M&M in the longer term horizon. We believe that the pain from SsangYong's underperformance is also a thing of past. And so one can look at dips, and a level of 650 would be a great entry point to hold M&M for the year ahead.
Okay, great. So I'd say both our experts are fairly positive on M&M. It's a good one if you want to hold, and you can use dips to add. Let's move forward then. Harshal Karadia of Delhi has written to us, and he's asking if Realty stocks are poised for a comeback. So, you know, it's quite funny, Kunal, because before the Realty index really showed this big up move today, the building material stocks have all been shining over the last month or so, and we've discussed that quite extensively here on BNSN. So now that, you know, today the index is showing an uptick, I guess it's a good day to discuss this. Where within Realty would you advise our viewer to invest?
Very fair kind of a question, and I think coming at the right time, because a lot of the real estate stocks, and especially the ones which are in F&O, Godrej Properties, DLF, etc., they're showing some very strong and solid signals on the long-term charts. Now, you know, the only question is that whatever has happened in the last 3 months, and I'm not talking about the last 9 months, because specifically many of these real estate stocks, they came back into the thick of momentum in the last 3 months itself, from, you know, the October or November lows. So I think in that regards, there has been a good spate of momentum into these names. But there's a difference between a momentum and trying to convert the momentum into a trend. I think that would require, you know, the markets to continue to remain in a very buoyant kind of a state. So if we expect that the indices would keep on moving up higher, we would go into a stable trajectory on the upside, then many of these high beta pockets of stocks, you know, they can continue to move up higher. If I have to pick up, you know, a couple of names, I would still go with, you know, major emphasis on Godrej Properties. I think the stock charts are extremely strong. We've seen a very strong trending up move for Godrej Properties. The manner in which the stock has scaled past about many of its resistances with such ease, I think that was one of the hallmarks for this rally. DLF on the other hand is still showing signs of promise, but, you know, every time you see the stock going up 5%, 10% higher, trying to surpass you know, a resistance, there is a hurdle which acts upon the stock price, and you see the stock scaling down lower, trying to, you know, gather its momentum again. So it's a stock which moves into, you know, very short bursts of momentum. So if you want to ride, you know, stocks like, you know, from a short-term view, you can look at stocks like DLF if you're looking to ride some short-term momentum. But for a positional play, I think Godrej Properties is a stock which I would want to then you know, advise.
All right. Well, that's, of course, with respect to some of these residential stocks, you know, and Kunal's view on them. What do you think, Raghavendra? You know, I mean, we read a lot of reports, etc., from some of these realty consultants, and especially if you look at the data coming in from Maharashtra, where the stamp duty had been cut. Now, I'm not sure how much of this is actually just purchases made, and it's now because the stamp duty has been cut that buyers are registering their property, and how much is new sales. But the fact is, green shoots are visible everywhere. So what's your view on, you know, some of these realty stocks?
Broadly, as a sector, we are bullish. The interest rates are coming down, and realty sector gains from a interest rate trajectory coming down. So that's a positive. The implementation of RERA in the last 2 years have actually separated the large cap realty players from the smaller unorganized participants. So that is like men getting separated from boys, and which is clearly being reflected in the large cap names doing very well versus the smaller or mid cap realty names, or even the unlisted names. So that trend would continue. This particular stamp duty reduction in Maharashtra has augured very well for specific names which have a broader presence across Maharashtra. But other states could follow suit and see some kind of stamp duty reductions across state levels, which could be a pan-India exercise in the quarters ahead. We do like Godrej Properties at current levels also, considering its asset-light model and good corporate governance. So realty stocks broadly, we are poised because the building materials have done well, the cement stocks have done well, and it is the time of realty to do a catch-up play. Godrej Properties continue to be a top pick or from the realty space at current levels also.
All right. Well, that's, of course, residential stocks. Let's move on. And we have another question. This one is with respect to an entirely different industry, and that's chemicals. Jay Shah from Ahmedabad writes, I'm looking to invest at SRF in SRF at the current levels. Is it a good investment? Kunal, this is a stock that's been that's got a lot of interest, from traders, institutional investors alike. What's your view on an SRF?
Absolutely. I think the stock which has done so well over the last 7-8 years. 2013 the stock was at 120 125 rupees, and now we are, as we're talking, the stock is at 5,500ish kind of levels. So it's been I would say a phenomenal uptrend for SRF. And when you see such kind of a trending stock, the bigger idea to try and capture these names is to try and use significant dips, times of distress, times when these stocks and the markets overall go through a correction, because these are quality stocks which one should hold from a portfolio. The only question which happens is that traders and investors, they tend to catch on to these stocks when they're in the thick of momentum. So now when, for example, SRF is at 5,500 levels, just to give an example, the 200-day moving average, which is a very nominal mean reversion mode for the stock, is still at 4,100. So you can gauge the kind of gap the stock has been moving up higher with this long-term average. So if there are mean reversions, then you might see the stock going through a sharp correction, but then it will continue the long-term uptrend. So I would suggest that have a buy on dips approach into this name. Use dips like what you saw, I think, last week when the stock had come back to 5,000, 5,100 levels. These are the kind of dips where you should look to accumulate stocks like SRF.
On the prospects, but it's run up a fair bit. Raghavendra, coming to you, a large portion of SRF's EBITDA and earnings actually comes from the packaging segment, and people keep talking about it as a chemical company, but they also have a huge interest in packaging film. So, that segment has also been in an uptrend because of COVID and input prices being better than they were last year. So, fundamentally speaking, is SRF still looking attractive or slightly expensive now?
Varun, specific to the packaging segment of SRF, that is not significant revenue contributor at current levels. So that has to go a huge revenue uptake for that to have a significant revenue and PAT contribution to SRF. Currently, SRF is at price levels of 5,500. It has reported a full year earnings of around 150. So that gives a current multiple of 36. We believe a 30 would be a fair multiple. So one can look at levels of 4,500, 4,600 for SRF to enter for a long-term horizon. But at 5,500, we would wait for a correction to come into the stock, multiples to correct from 36 to 30. The earnings would continue to be stabilized at 150 EPS. So 150 EPS times 30, 4,500 would be a fair value where one can enter into SRF.
Okay, great. Thanks for that, Raghavendra. So slightly more cautious view from him. 36 times earnings is quite expensive, so maybe you'll get a better price to add into this one. But on that note, a big thank you to both our guests for sharing your perspective with us. Time for a quick break on Buy Now, Sell Now. Stay tuned. We'll be back in just a minute.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Well, in our What's the Story segment today, the counter that we are talking about is Borosil Renewables. It's rallied more than 4.5 times in the last 1 year. So to explore what's the trigger behind this rally, we have with us Vivek Eicher. Vivek?
In this edition of What's the Story, the company in focus is Borosil Renewables that's seen a stellar run. Now, talking about the company is the only solar glass manufacturer in India. In fact, it doesn't have any competition in terms of an Indian manufacturer. The company started its journey in 2010 in Gujarat with a solar glass manufacturing facility. It has since doubled the production capacity to 2.4 gigawatts per annum. Remember, the company is promoted by Borosil Limited that was mainly known for specialty glass products. Now, while the company in focus, now remember the company in the last 1 year has gone up in terms of stock price by almost 4.5 times. The stock is up 6.5 times from March lows, and the stock is up almost 12x in the last 5 years, significantly creating significant amount of value as far as shareholders are concerned. So what is it that is working for the company? Number one, it has a very strong moat, given the fact that it's the sole solar glass manufacturer in India. Also, given the fact that the government is now looking at imposing anti-dumping duty on competition. Remember, competition is mainly from Chinese players, and remember, Chinese companies actually get a significant amount of subsidies as far as from the Chinese government is concerned. So the company is claiming that the company is at a weaker footing when you're comparing it to imports. However, the government is now looking into it, and that could provide a great impetus as far as Borosil is concerned. Company is also saying that in terms of demand as well as pricing trends, it has been quite resilient in 2020. And also remember, the company is a very strong player with 40% market share on a daily basis in terms of the capacity within this particular segment. So going forward, some of the triggers according to the company, the demand is very strong, pricing trends are very strong. Company is significantly ramping up capacity. They believe that they would be at par with Chinese players in case the anti-dumping duty does come about, and also Chinese players, given the fact that significant pollution curbs are being put into it. A lot of Chinese players are facing capacity constraints. All of this is making this particular stock the darling of the market.
All right, thanks for that, Vivek. Things truly seem quite positive for Borosil Renewables going forward, and of course it's one that's been a star performer this year. But another stock which has also been a star performer this year, and particularly on the back of some government initiatives, is Dixon Technologies. And we have a latest development from them today. They've actually signed a pact with Motorola for smartphone production. My colleague Vinny is now standing by with the details. Vinny?
Dixon has signed a pact with Motorola for manufacturing smartphones, and this will be manufactured in its Noida facility. Now, this is through Dixon's wholly owned subsidiary, that's Paget Electronics Private Limited, which has entered into an agreement with Motorola. Now, Dixon is one of the few players who has actually been approved for the PLI scheme by the government of India, so which is a very beneficial part of Dixon. And when we had spoken to Dixon at that time, they did mention that they are planning to increase the revenue share which comes from mobiles is very less as of now. It's only 10 to 12%, which was there in FY20, but over the next couple of years, they expect it to be at around 40% of the revenues coming in from the mobile phone segment. So that is something very interesting. And obviously, this is further a play coming in on that part. We've seen the stock seeing a nice up move post this news, and it's up as much as 5%. So very good deal coming in for Dixon Tech in terms of a new clientele coming in from for the company. They do have a lot of big clientele, so in the mobile phone segment now they do have Motorola as well. A positive sign for the stock.
Okay, thanks for that, Vinny. A very important development for Dixon Tech. Keep an eye on that stock. It's already done so well this year. But speaking of this year, we only have 3 days to go, and 2020 would have been one roller coaster. But that's not really deterred 5 stocks that we want to bring to your attention. They're champion stocks of 2020. They've beat the turbulence and come out on top. And they should be coming up on your screen in just a second. We have Tanla, of course, which is the CPaaS player, which now sees a Mansa participate, which has seen a tremendous rally, a 10x this year. Mobina has spoken about it extensively on our channel. We then have CG Power, which is now taken over by the Murugappa Group, and prospects look very good. The debt has been halved. Bankers have taken a haircut. Aarti Drugs, tremendous pharma company, great management, also been a 4x this year. Borosil Renewables, Vivek Eicher just spoke about, and then Apollo Tricoat, which is also from the APL Apollo family, a 3x this year. So these are our champion stocks, and the outlooks for these ones looks just as good for the next financial year as well. But on that note, time for a quick break. We'll be back shortly. Hi, welcome back to Buy Now, Sell Now. As we wind down the show, let's give you the quiz question and answer once again for all our viewers who participated. We asked you which one of the following logistics players has the highest ROCE and trades at the highest PE multiple. Options were TCI, Gati, Mahindra and Snowman, and the correct answer was TCI Express. We have 3 winners today. We have a Vinay R. Kale, an Umesh and a Dr. Churi who got it right. Congratulations to all 3 of you, a hearty one at that. Encourage you to keep participating. But on that note, I believe we're completely timed out here on Buy Now, Sell Now. Thanks for watching. Keep it with ET Now.